Welcome back. This is episode 168. The merger of TD Ameritrade Brokerage and Charles Schwab Brokerage, otherwise known as Schwab, has been completed. And in this episode, I want to share my view of how the merger went and also share with you some issues that we've been finding and clients have been finding since this merger. So if you're new to the show, my goal is to teach you how to save for retirement, how to plan for retirement, and how to pay less taxes in retirement. And if you want more help on how to do all of this, then consider taking my comprehensive retirement planning course called Retirement Readiness Review. And it's an online course where I will walk you through all of the steps involved in planning and managing your own perfect retirement. To find out more about that, head over to retirewithryan.com/on-demand to learn more. So as I mentioned earlier, the merger between TD Ameritrade and Charles Schwab was completed over Labor Day weekend of 2023, just a couple weeks ago. And any clients of TD Ameritrade Brokerage or TD Ameritrade Institutional, which is what my firm, Morrissey Wealth Management, uses for our clients, are now clients of Schwab. And overall, I would say the merger went pretty well in the sense that I didn't have any clients whose accounts didn't transfer over and there aren't any missing funds. Obviously, that's extremely important anytime you have a merger of a broker-dealer like this because you don't want to have money going missing. However, we've been finding out a lot of little things that we were not made aware of prior to the merger. And Schwab had a lot of time to plan for this merger, about 2 years. And during that time, there were a lot of conference calls and webinars that myself and my team attended. And we asked a lot of questions because we wanted to learn as much as possible about the merger. We wanted to know about any potential changes that might impact our clients or the processes that our firm uses to conduct business so we could let clients know in advance or find other solutions to get things done. And one big change we were made aware of early on was the retiring of TD Ameritrade's open API platform known as VEO1. And this is the system that we use to help manage client accounts. No clients are familiar with this, but we wanted to make sure that we are going to be comfortable with Schwab's platform. So about a year ago, we made a conscious decision as a firm to open any and all new client accounts at Schwab so we could learn more about their system, what is known as the Schwab Advisor Center. And I'm happy to say that this has definitely paid off as we feel very comfortable using Schwab Advisor Center, but we still miss VEO1, but there's nothing we can do about that. But however, there are other changes that we've become aware of that may impact your accounts at Schwab, and I'd like to share those with you. The first issue we've encountered is seeing spouses or partner spouses accounts through Schwab Alliance platform, which is how clients can access their accounts online at Schwab. So it's client.schwab.com. And if you haven't created a username at the Schwab Alliance platform, then I definitely suggest you do that. I've been telling clients and listeners in other videos to do this. So again, you go to client.schwab.com and click on New User. And from there, you can walk through the process of creating your own login. And we've, again, been telling clients to do this for months. And many of our clients did this. And as of September 5th, when the merger was complete, logged in and viewed their accounts. And we've received many emails from them letting us know that they had logged in and their accounts are there and everything's properly transferred to Schwab. We also, as a backup, have checked all client accounts and their corresponding account at TD to make sure that the account had properly transferred over. And as I mentioned before, we haven't found any mistakes. However, we have many couples that we work with, and they each have their separate accounts. Like retirement accounts, for example, you can't have a joint retirement account. You have to have your own retirement account. And generally, for a couple, one spouse had a TD Ameritrade login, and from there, they were able to log in and view all of their clients' accounts, including their spouses. Now, we were able to set this up for them by signing a form that TD Ameritrade had authorizing this. And my clients were imagining that this would continue over, but Schwab, for some reason, wasn't able to honor this setup, and they never told us anything about this. So clients were logging in after the merger and seeing only their accounts, not their partners or spouses' accounts. and thinking not everything transferred over. And so, we had to look into this. And what you need to know is that you have to create your own login. Each spouse needs to create their own login. And then once you've done that, you can authorize your spouse to view your account. You can authorize anybody for that matter. So it is a little more flexible in the sense that with TD, there was a form to sign, and I'm not sure if you could have authorized another person, but with Schwab, you have to do it online, but you could authorize another person. Let's say you want to authorize your son or daughter to be able to share your account. You can do that, but it's a little more cumbersome, and this would have been something that would have been nice to know. The next issue we've encountered has to do with tax withholding, and many of our clients are retired, and they're taking monthly distributions from their retirement accounts to live on, and we work with our clients each year to determine how much tax they should be withholding for both federal income tax and state income tax if they happen to live in a state with state income tax. Because we want to try to figure out to not have them owe money at tax time, but also not give the state or federal government an interest-free loan. Federal tax withholding at Schwab is a little different. As with TD, we could either have a percentage or a dollar amount withheld from their distribution. But with Schwab, we can only do a whole percentage. So that isn't great, especially if you are trying to figure out or how much dollars you want withheld for federal income tax. You've already figured that out and you just want the dollar amount withheld. But now you must reverse engineer that amount by playing around with percentages so you can get to the dollars that you want withheld. So it's a minor change. However, with state income tax withholding for our Connecticut clients, there's a major change. And we're never made aware of this prior to the merger. Connecticut has state income tax like a lot of states, and the maximum tax rate for Connecticut is 6.99%. But this rate only applies to individuals earning over $500,000 or couples earning over $1 million. And with TD, if we had a state tax form on file, a Connecticut state tax form known as a CTW4P, we were able to help clients fill that out. And then from there, we could specify how much tax we want to withheld. But with Schwab, we can either withhold 0 or the maximum rate of 6.99%. You have no flexibility. So prior, we might be having a client withhold 5%, but now we only have those two options. So many of our clients are in Connecticut. Schwab never told us anything about this. We never heard anything about this on the conference calls that we have, and we really only found this out when we went to process our distributions for October for our clients and found this out. And we found out that this applies to other states that have state income tax like New York, but not all states require the maximum withholding. So you really have to check with Schwab or your advisor to see if there are any other states that require the maximum withholding. For us, the clients that we work with, none of the states they live in have this, but you could be in a state that has this maximum withholding. And I've complained to Schwab about this. I've sent a couple emails. I'm sure other advisors have as well. And for now, I haven't heard that the policy is going to change. And it's unfortunate because most of our Connecticut clients will pay some type of Connecticut state income tax, but they're not going to be paying the maximum. So they can either withhold 0% and possibly pay penalties or interest when they go to file their Connecticut state income tax, or they can hold the maximum percentage and give Connecticut a interest-free loan until after they file their taxes. So this isn't great. I'm hoping that Schwab will possibly change this process, and I'll keep putting pressure on them to see if they will, because if TD Ameritrade was able to do it, I'm not sure why Schwab can't. Another change clients are seeing is when you go into schwaballiance.com to verify your accounts, you're seeing beneficiaries listed on retirement accounts. And prior with TD, these beneficiaries were not listed. They were on file. We set them up when we opened accounts, and we would also, when we met with clients on an annual or semi-annual basis, we let them know who the beneficiaries were so that they could see who they were, especially if they wanted to make any changes or if they didn't have contingent beneficiaries, they could add them. But this new change with Schwab could be bad for some clients, especially if they made an estate plan and they forgot about it, right? We do things and we forgot, maybe why we did it, and they go in and change beneficiaries. this could be bad for their long-term estate plan, especially if they don't discuss this with their financial advisor or their estate planning attorney. We've even had a few clients reach out to us and asked us to change their beneficiaries, but we can't do it because for client security, obviously, they have to do it on their end online, or they can sign a form that we can send to them to complete. The last issue that we've been made aware of is that when clients transfer $25,000 or less in or out of Schwab, we're not made aware of this. So at TD, we are made aware of all client deposits and withdrawals. Every day when we log into our computers, we had a notification set for many things, but it would tell us, X amount of dollars came into so-and-so's account. But now we're only going to see that for amounts over $25,000. And I want to make sure that my client's money is always invested in earning interest for them. And I have another video you can check out which talks about how you can earn more interest on your cash at Schwab. So now, if clients transfer money into Schwab below this minimum on their own, and we're not made aware of it, then they could be missing out on opportunities. And it's great that they have the ability to do this, but this could create more problems. Let's just say, for example, a client made a request to transfer out $20,000, but we're not made aware of it, and there's no cash in their account, everything is invested. That transfer is not going to go through. And it takes usually 2 to 3 business days once you sell an investment, depending on whether it's a stock or a mutual fund or a bond, for that money to become available to be able to be transferred out. So if a client didn't let us know this, they could think, oh, this $25,000 or $20,000, somewhere below $25,000 is going out to their account. But it's probably going to be a few days before they realize it didn't go out. And then we'll have missed an opportunity to where we could have sold this investment to make the money available for when the client wants it to go out. So the other thing could happen too is that if a client transferred money into their account and they never told us, that money will just sit there until somehow we're made aware of it. We don't get a notification, so we'd actually have to go into the client's account to check this. And as you can imagine, we have hundreds of clients' accounts, and we do review them all the time, but we can't go into every account every day to see if there's been any new deposits. So hopefully Schwab is going to fix this, and we'll get some notification when a client is making a transaction in or out of the account of under $25,000. Now, we have a lot of options as a firm when it comes to choosing our broker-dealer for our clients. And I will say that I have carefully considered other options when this merger was announced between TD and Schwab about 3 years ago. And I've interviewed many other firms, looked at their offerings, compared them to Schwab, and I've still decided that Schwab is the best place for our clients. Schwab has a good platform. They currently don't charge our clients anything to keep their accounts there. And, they have a good offering as far as products. So I'm confident that, this is still the best choice for my clients. However, the beauty of Morrissey Wealth Management, of my firm, is that we are an independent company and we just work for our clients and ourselves. We don't work for Charles Schwab. And if we decided that Charles Schwab wasn't the best place for our clients, we wouldn't hesitate to let them know that another broker-dealer / custodian was a better fit for them and help them transfer their accounts out of Schwab. So we'll continue to monitor the situation and make sure that we're staying ahead of any changes that could be happening and communicating those with our clients. But if you've encountered any issues with your accounts since the merger, I'd love to hear about them. Please either comment in the video below. If you're watching or if you're listening, you can send me a message by going to retirewithryan.com and clicking on Ask a Question. So I hope you found this podcast informative about the changes that have occurred since the merger with TD and Schwab. And if you haven't subscribed to my YouTube channel, please do so. If you're watching, if you're listening, please go on YouTube and search retirewithryan.com or Retire with Ryan podcast and subscribe. Have a great week, and I look forward to talking with you next Wednesday. Take care.